anti-fraud and compliance efforts, ethics, prevention, and deterrence. Okay, good stuff. All right. Four modules in this chapter. Module 1 will provide an overview of ethics and its important role in setting a solid foundation upon which compliance and anti-fraud efforts can be built. Module 2 will dive deeper into organizational compliance, the process of making sure that the organization and its employees follow ethical practices, laws, regulations, standards, policies, and procedures. Module 3 examines fraud deterrence efforts, and Module 4 will consider fraud prevention. Okay. And on that note, I'm going to turn the camera off so you can concentrate on the slides. Okay, here we go. And all right, let's talk about ethics. Okay. And I know you've depending on how far along you are in your coursework, you've probably seen business ethics. Hopefully, you've seen ethics spoken about in more than one class, but ethics involves questions requiring reflective choice and their consequences to the individual and to others. Okay, they're decision problems. Ethics considers the rules and regulations that are in place to guide behavior, as well as the consequences for breaking those rules and regulations. Ethics often relies on moral principles to guide choice of right and wrong. I'm going to stop right there to check someone else into the class. Okay. And number 4, ethics is concerned with outcomes, the assigned impact associated with making a decision where the impact reflects the underlying values of individuals and organizations. So, is it ethical for a fraud examiner or forensic accountant to lie to a perpetrator during an interview to elicit a confession? Okay, if you don't lie, not lying, but the perpetrator gets away. Number 2, lying, but then the perpetrator confesses. In either case, the fraud examiner or forensic accountant must choose from a flawed set of options. Okay. And legally, by the way, in the United States, to a certain extent, you are entitled to not tell the truth if you think doing so. In fact, we saw a bit on that in one of the videos. If you think doing so will get a confession, will elicit a confession, will elicit the truth. However, in Europe, the European Union has decided that no, whether it be a fraud examiner or a police officer cannot lie to someone being questioned in order to elicit the truth. So, difference between the two, but again, it's an ethical decision. But legally in the United States, we allow it to a certain extent if it will elicit the truth. If you think it will get a confession that's not true, then no, you're not allowed to do it. Okay. So we have various approaches to solving ethical dilemmas. One is to ask the question, is it legal? Or does the conduct violate known rules? Okay, that is the floor. That's the starting point for determining if certain conduct should be avoided. If it's not legal, you don't do it. Okay, if it violates known rules, you don't do it. But as it points out, this is the lowest threshold for ethical decision making. Okay, then you think about the means versus the ends. This is the fundamental outcome-based ethical framework, justifying your actions that otherwise could be considered immoral, unethical, illegal, maybe even fattening. Who knows? But That is, those are two approaches that are often applied. And sadly, some folks is like, well, the end will justify the means. Well, that might not be ethical. The other is, well, it was legal. Well, again, a lot of things are legal, it's just not ethical. Okay, so there are various ethical principles, and again, you should have probably come across these in a business ethics course or a philosophy course. Okay, and so three of the biggies, okay, is the imperative principle, which tends to ignore the outcomes, simply provides directives and rules without exception that are in the best interest of society as a whole. Okay, so there are certain things you cannot do, and there's no exceptions. All right. You cannot murder people. Well, that seems pretty good, but no exceptions. It assumes all people are aware of these rules and agree to follow the rules. That's the imperative principle. The classic utilitarian principle is that ethical problems should be solved by weighing the good and bad consequences. Okay, what has the greatest amount of utils? Okay, so you say, okay, well, maybe doing this bad thing would be wrong, except in the end, it'll cause a lot of good. Okay, well, that's the utilitarian principle. Then there's the generalization principle. If all relevantly similar persons acting under relevantly similar circumstances were to act a certain way and the consequences would be undesirable, then no one ought to act in that way without a reason. Okay, so that's the enunciation of the generalization principle. So, ethics, trust, and responsibility. It is impossible to provide a blueprint for every situation with laws, rules, and exceptions. Try as you might, and I've been involved in drafting laws myself, but you have to be sort of, writing decisions for courts. And you have to try to, use your imagination to try and think up every sort of possible situation. Frankly, you just can't. Okay. So it's impossible to provide a blueprint for every situation with laws, rules, and exceptions. Civilized societies are grounded in trust, with underlying values and implicit codes of conduct that guide behavior. When that breaks down, that's where civilized societies break down. As members of society, we have a responsibility to, with apologies to Spike Lee and his movie, do the right thing. So often, when I've taught business ethics, and they give you, using these different models for how to make an ethical decision, I always add at the bottom, do the right thing. Hopefully, at this point in your lives, you've all sort of established your own personal ethical principles and goals. And I always talk about those little hairs on the back of your neck and a little voice inside your head. Do not quiet it. Do not hit the mute button on it. Listen to it. Be aware of those little hairs that if you're going to do something and that little voice is saying, I don't know about this. I don't think that's right. Listen to that voice. Those little hairs on the back of your neck, that's millions of years of evolution. Okay. Telling you that, this is not a good decision. So anyway, bottom line, do the right thing. So, ethics and values as drivers of personal behavior. Individuals must make the commitment required to follow their ethical values in all cases. except those that have extreme consequences. Okay, you might say, you know, I think it's wrong to lie. I will not lie. Okay, and then they always give examples from like Nazi Germany, or the Gestapo comes and they're looking for a bunch of innocent people, and so you lie to them. Well, that's the extreme that's a situation with extreme consequences. But generally, commit to following your ethical values. Professionally, guidance and advice from professional organizations or other practicing professionals may assist the individual in making the best decisions. I'm hopeful that many of you, if not all of you, go on to become CPAs. And if you do, and when you do, and in fact, you can join right now, join things such as the Illinois CPA Society and the AICPA. Both organizations have an ethics hotline that you can get in touch with. So if you're placed in an ethical professional situation, you can contact them. They have a bunch of cases in the past that they can look to. Okay, I myself, in the American Bar Association, we have a large section called the Section for State, Local, and Tribal Government Law, and I am the ethics officer for that. So if attorneys practicing in that area have an ethics question, sadly, they get to turn to me, but I am the chair actually of the ethics committee, and I field those questions. So again, whatever profession you go into, most good professions, whether it's medical doctors or CPAs or attorneys, they have a ethics hotline or an ethics committee that you can turn to for advice. If nothing else, it's a good safe harbor that if you have that ethical dilemma, turn to them, get the professional opinion on how you should perform or react or act. Then if things go bad, you can say, well, I sought advice. This was the advice I got, and that's what I did. Okay, so professional conduct. Again, in fact, I'm just working on this right now for something new altogether, but you should have, again, whatever profession, very often you have a code of conduct. Okay. Accountants have that. The AICPA promulgates a code of conduct. If you become an auditor of publicly traded companies, the PCABU, the Public Company Accounting Oversight Board, has its own code of professional conduct. If you become an attorney, there is a code of conduct as well. Excuse me. Yeah. Oh my goodness. Give me a moment. Okay, and I'm back. So, what is a code of conduct? It's a specialized body of knowledge. Admission is governed by standards and qualifications. So a professional society, a profession very often says, okay, in order for you to be admitted, okay, we expect you to govern yourself accordingly, to meet certain qualifications and meet these standards. A profession also has recognition and acceptance by society, a characteristic that inflicts social responsibility back on the profession. I don't like the word inflicts, but it's maybe a good term. I've been doing some work lately with regards to, as I think you know, using CPAs to audit elections. And why are CPAs so good? Because various surveys show that not just CPAs, but accountants in general. Society trusts them. Okay, we for the past 50 years, the Gallup organization has taken polls on various professions as to ethics and honesty, and accountants score very well, and they're the low marks. They have some of the lowest, their numbers for, say, being uh, held for, you know not having good ethics are very, very low. They're right up there with, nurses and child care practitioners. So we're held. So society holds accountants up as being ethical and trustworthy. And when that happens, well, then you want to give back. You want to maintain that. That's a valuable thing. So it gives us a social responsibility to be ethical and trustworthy, so that they continue to hold us to that high esteem. Um, Again, the professional conduct creates standards of conduct for dealing with the public, but also dealing with other professionals and with our clients. So it's not just us and the client. It's also us and our fellow accountants, our fellow fraud examiners, and us and the general public. And there should be some organizational body that's devoted to advancing the profession and responsibilities of the profession. So, as I say, you've got the CPAs, you've got the American Institute of CPAs. For management accountants, there's the Institute of Management Accountants. Fraud examiners, there's the Association of Certified Fraud Examiners. Attorneys, the American Bar Association, et cetera, et cetera. So, turning to my friends at the ACFE, we have the Certified Fraud Examiners Code of Ethics, which include at least, it has, here are 8 particular points that the authors wanted to emphasize. Number 1, a CFE shall at all times demonstrate a commitment to professionalism and diligence in the performance of his or her duties. A CFE shall not engage in any illegal or unethical conduct or any activity which would constitute a conflict of interest. 3, a CFE shall at all times exhibit the highest level of integrity in the performance of all professional assignments. 4, a CFE will comply with lawful orders of the courts and will testify to matters truthfully and without bias or prejudice. 5, a CFE, in conducting examinations, will obtain evidence or other documentation to establish a reasonable basis for any opinion rendered. 6, a CFE shall not reveal any confidential information obtained during a professional engagement without prior authorization. 7. Now, number 6 can sometimes conflict with number 4. Okay, so if you were given confidential information, but then subsequently a court orders you to disclose it, well, then you go along with what the court says. Okay. So that was 6. So 7, a CFE shall reveal all material matters discovered during the course of an examination, which, if omitted, could cause a distortion of the facts. And 8, a CFE shall continually strive to increase the competence and effectiveness of professional services performed under his or her direction. Okay. So that's on us. Okay. CFEs or, forensic accountants. The AICPA has similar rules that we should follow and comply with. So now then, let's talk about this thing. We've mentioned it a few times. You've probably heard it before, but the tone at the top and a culture of ethical behavior. So a couple of things in any organization, especially corporations, but really any organization. I mean, when I was a commissioner at the Board of Elections, we had this. We had a code of conduct, code of ethics that every employee, would get a copy of it and sign off that they've read it and they understood it. Okay, so right off the top, a code of ethics signed by all personnel, and sometimes it goes by different terminologies: code of ethics, code of conduct, etc. But every employee, and in some cases contractors as well, should be made aware of it, should sign a document saying that yes, they're aware of it, they read it, they understand it, and they will comply with it. If for no other reason, that if an employee violates it, it gives you a very easy way to let that person go, to fire them. Why are you firing me? Because you violated the code of ethics that you said you were, you understood and you were going to be in compliance with. But it just emphasizes also, it sends a signal that this organization will act ethically and we expect you to do the same. Okay. The organization should be committed to hiring honest executives, managers, and staff. This is why, especially at the upper ranks, or for those who might be handling sensitive information, or for that matter, money, you will perform a criminal background check. You'll tell them, you have them, okay it, and yeah, if you've got especially felony convictions in your past, but especially any sort of crimes, as we use the term of moral turpitude. Yeah, we're not really going to hire you for an executive level position, unless you can prove to us otherwise. Once individuals are hired, they need to be properly supervised. Okay, you just don't hire them and let them go. A responsible organization will be responsible for their employees and will supervise them accordingly. And employees should receive regular training on acceptable versus non-acceptable behavior. Okay, there should be, even here at Governor State, we have to annually take an ethics course. It's an online course. But again, if nothing else, it is a constant, or rather a frequent reminder that the organization considers ethics very, very important, is very important and vital. And we expect you to feel that way as well. Okay. Okay, we got somebody else joining our happy little group. Check you off here. Okay, moving on. Slide 14 of chapter 14. Organizations should maintain an environment dedicated to fraud prevention and deterrence. So now let's, get, away from just ethics in general to fraud deterrence. Okay. How do you do that? How do you maintain that environment? And, showing that you're dedicated to it. Well, right off the bat, we like to say continuing education of fraud awareness. A bit self-serving for for us educators and fraud examination and for the ACFE and such, but beyond that, it is important. Again, it shows, as I've mentioned several times, I think this semester, very often when you say to management that yes, I think you ought to have an annual course in fraud awareness. Their pushback, it's like, well, you're going to be showing them how to commit fraud. Well, no, we don't give them step-by-step instructions on how to commit fraud. On the other hand, it tells your employees that we consider um, fraud deterrence and fraud prevention very highly, and putting you on notice of that. And also, it now essentially recruits all of your employees into looking out for fraud, okay, including amongst their coworkers. But so it actually works out better in the end. Number two, failing to maintain a work environment that discourages fraud may enable an employee to justify their unethical or illegal actions. And we talk about the fraud triangle, right? The justification. We do not give the potential fraudster out there reasons for rationalizing their behavior. Okay. Provide assistance for employees with problems. And this is a big one. And I'm happy to say a lot of big corporations, big organizations of all kinds have come to the realization that, yes, it will cost you money to have an employee go through an assistance program for whether it be drug addiction or alcoholism or gambling addiction, etc. It is in the end, it's going to be less expensive for you to keep that good employee, give them the assistance that they need, than to have that essentially ticking time bomb out there who, say gambling addiction. We've noted that as gambling has become more available in our society, the incidence of fraud occupational fraud is increased. So we're not about to get the online, casinos and online betting to go away. So instead, we reach out to our employees and say, look, if you have a problem with gambling, let us know. We will help. Better to do that than to have that employee who's racking up the losses. And by the way, you will rack up losses out there, in your company, who's now looking for ways of ripping you off so as to pay off this debt that they don't want to speak about, this unshareable problem, right? So provide those assistance programs. But you also need appropriate disciplinary procedures. Not too harsh, but you can't just wave it off. If for no other reason than the attitude that is signaled to the other employees, right? You want to signal that, look, we have these rules of conduct, we have this ethical code, we expect you to abide by it, and when you don't, well, there will be appropriate disciplinary action. So it's a great deterrence for others. And I can't emphasize this enough, the anonymous tip hotline. Do you sometimes get tips for, ridiculous, or people trying to hurt somebody they don't like? Yeah. And having worked worked with an anonymous tip hotline, being on an audit committee, being the chair of an audit committee, very often the tips come to us. You can weed those out pretty quickly. Okay. It's, this is a case of this person doesn't like that person, and that's all there is. But you may want to take a look at it just in case there's something going on. But the savings that you get from having that tip hotline, from allowing your workers to essentially blow the whistle in some cases on their fellow workers, is well worth the cost. Again, whistleblower protections, if they're coming forward and blowing the whistle in good faith, they should be protected and, in fact, encouraged. And the establishment and maintenance of good internal control environment. That's really the basis behind legislation like Sarbanes-Oxley. And and other legislation, okay, is to see to it that if you have a good internal control environment, a lot of this, unethical behavior, especially massive unethical behavior, will not occur. Okay. So here's what the authors suggest is a good 5-step approach to compliance, to fraud prevention, deterrence, and detection. I like to talk about, when I talk about fraud examination, 3 things. Okay. Detection, prevention, and deterrence. I've mentioned this before. Detection, the fraud has occurred. You're just trying to find out how it was done, who did, and how much is gone. A little too late to stop it. It's okay. That's detection. Prevention is putting controls into place that will not allow that fraud to occur. Okay, putting locks on doors, for example. Okay, putting. I had one case of a hospital. I may have mentioned this. A hospital that did not have a pharmacist on duty at night. Okay, but at night, some patients will need some drugs. Okay, so they left the door to the pharmacy unlocked, and if a patient needed drugs, the nurse or doctor was to go in there, pull the drugs they needed, sign out a little, that little clipboard. You write down what you took, and then close the door behind you. They found that there was all sorts of drugs missing from there, especially like narcotics and things like that. Well, hey, how about we put a lock on the door where people have to use their ID badges to open the door, and then we know who's coming in and going out. Uh-huh. Okay, that's a control. Deterrence, as I say, is playing with people's heads to an extent. I say the classic case was the school I was at where they put a video camera in the back of the computer room where they were having a lot of thefts. And the video camera was not attached to anything, but just the presence of a video camera deterred the bad behavior. Okay. So number one, know the exposures. Where are you exposed to fraud? Okay. So that's why we want to have that brainstorming session with the appropriate individuals. And then once you figure out, well, where are we exposed? What is the level of risk? How risky is it that this might occur? Okay. And if it does occur, how bad would it be? And then we plan our audits to consider those potential exposures. Translate the exposure into likely symptoms. Okay. So, for example, if there are people stealing drugs from the hospital pharmacy, well, what would be a symptom? Well, there are drugs, the inventory of narcotics at the pharmacy is always off. Well, there's a red flag, right? Always be on the lookout for those symptoms. Build controls, audit procedures, and data mining programs to look for those symptoms, as I say, sometimes called red flags. Okay, you use data analytics that can pop up when the inventories of certain drugs seem to be greater than the number of patients that you have, right? Then pursue those red flags, those symptoms, to their logical conclusion and ground examination conclusions in the evidence. That's our evidence-based decision making. And remember, red flags themselves are not indicative of the fraud. They are simply a signal that you need to look further, pursue those symptoms to a logical conclusion. Module 2, compliance. Okay. So I have civil litigation, suing people. Civil litigation allows one party to sue another in most situations where something bad has happened and the plaintiff has been damaged in some way. The defendant shares at least some of the liability, and the victim or injured party can prove the damages. Okay, that's civil litigation. A robust compliance program helps an organization to proactively identify the risks and improve ethical behavior. Acquiring and maintaining customers. It's an ongoing challenge common to across all organizations. So these are three things to keep in mind as we talk about compliance: civil litigation, a compliance program, and also keeping acquiring and keeping our customers. So, where are our risks of non-compliance? Or rather, where are our sources of risk? Well, risks for an organization include economic. If there's a general recession or depression, worse than that, right? Market volatility, currency exchange rates, interest rates. Well, we haven't had a depression yet, but market volatility, currency exchange rates, interest rates, yeah, those have been in the news in the last few months. There's regulatory risks, occupational safety, environmental and financial reporting. So very often we talk about, when you think of CPAs, fraud examiners, a lot of it is aimed towards the financial reporting regulations, the SEC, keeping an eye on how companies, make their annual reports. On the other hand, he's since retired. I knew a gentleman who was a fraud examiner. He worked for the Environmental Protection Agency, okay, and checked on reports that companies filed with regards to the amount of effluents, okay, toxic waste and such that would get dumped or disposed of at different plants. So, and then we got our friends at OSHA and Occupational Safety and Health Administration. And so a company can be at risk of getting, fined or worse by any of those regulatory agencies. Outside and to some extent inside as well, an organization are cyber threats. Okay. Shutting down computer systems, shutting down, both at the corporate or organizational level, but increasingly also at national levels. We now are getting reports of certain places where opposition forces are shutting down the internet at regular times. It's a very effective type of cyber warfare. Operational risk, the challenge is to qualify quality. The challenge is getting a quality and efficient and effective workforce, right? So, companies need people, at least until the robots take over. And so there's challenges of getting good people. There's a challenge of emerging technology, whether it be big data analytics, AI, robotic process automation. So there's that challenge. Okay. Reputational and brand risk. Okay. Amazing where the number of organizations that have collapsed, gone bankrupt, gone out of business because of one incident that harmed their reputation badly. So you have to always think about that as well. And then sustainability across all organizational dimensions. And sustainability is thankfully is a term that organizations are thinking about almost constantly now, which is good. So, laws related to ethics. The Foreign Corrupt Practices Act, the FCPA of 1977. Again, this came out shortly after the Nixon administration, when it was revealed that certain defense contractors or in the United States were bribing foreign defense ministers to buy the American defense systems. That's not considered kosher and it's not good. And of course, the companies then said, well, how are we supposed to know this is one of our salespeople on the other side of the globe. And then the FCPA came in and said, well, you either knew or you should have known. And by should have known, they meant you should have had a internal control system in place that would have set off a red flag if you've got one of your salespeople paying off or bribing a foreign official. And what would set it off? Well, maybe they established a slush fund from which they were, taking company monies and then diverting it to that foreign official. So FCPA was first piece of federal legislation that really required companies to put into place internal controls. It followed up in 97 with the Organization for Economic Cooperation and Development Anti-Bribery Convention. Okay, this is an international convention. And then following the Enron debacle in 2001 came my two buddies Sarbanes and Oxley, and the Sarbanes-Oxley Act of 2002, which really legislated publicly traded companies to have good internal controls across the organization, and then have the CEO and CFO certify it, sign off on it, that it is in fact in place and effective. The federal sentencing guidelines of 2005 were amended or was put into place, and yes, corporations can be found guilty of violating federal law. Can't put a corporation to prison, but there are other things you can do, such as fining them, preventing them from, certain business dealings, etc. But the federal sentencing guidelines said if, in fact, you had a good internal control system in place, and let's say you did, and nonetheless you had a rogue salesperson on the other side of the globe that was, figured out how to get around it and pay off foreign officials. The courts are told by the sentencing guidelines, you have to take that into consideration and not impose a harsh sentence. Okay, that will mitigate the punishment. And then a little later on, 2010, Dodd-Frank, Senator Dodd and Congressman Frank, who just heard last week went into hospice care, drafted and had passed the Wall Street Reform and Consumer Protection Act of 2010, which wide-ranging act that hopefully protect consumers and investors. Continuing with compliance, okay. Some of the problems we have in compliance is, of course, multi-jurisdictional organizations whose operations span local, state, and national domains, and they need to consider compliance for each locale. So you've got, a company that's all over the place. You might think, well, the state of Alabama passed the law requiring this, that, and the other things. Well, guess what? You have a store or a small factory in Alabama, you have to be aware of it and you have to comply with it as well. Additionally, having robust policies and processes are critical elements of compliance efficiency and effectiveness. What you want to do is categorize threats and risks, the potential threat and risk, the identified threats and risk, and the reported threats and risk. Then go out and gather relevant preliminary evidence to confirm the validity of those allegations. And once confirmed, compliance leadership needs to evaluate the severity of the allegation. And I say this that a lot of our big, especially multinational corporations, have compliance departments. I'll just give the case of one certain very, very, very large defense contractor who got caught, had a very high-ranking person in their organization who was essentially accepting bribes. And the government could have shut them down, okay, debarred them. Not disbar, that's what you do to an attorney. Debar tells them you can no longer have any government contracts. The problem is this is such a big defense contractor that they government couldn't do it. They need them too much. So they said, okay, we'll settle it out this way. You will create a compliance department and you will fund it and you will hire a lot of good compliance people, and the head of compliance, he will be the chief compliance officer, the CCO, and will have an office on the same floor as the CEO and the CFO and the COO. That we will, in order for us to go along with you continuing to operate, you will make compliance that important that you have a chief compliance officer, and they will be on the same rank as the other top executives, the C-suite, as they say. And since then, a lot of companies have done that. Create a chief compliance officer and give them the rank and the prestige that should go with that title. Okay. We're at bullet point number 3. Those compliance violations deemed significant need to be escalated to the appropriate levels of leadership. And that might mean you bypass the CEO, go straight to the board. Okay. Generally, compliance issues need to be examined at one level higher than the level of the allegation. Sometimes it's better to go 2 levels, but at least 1 level higher. So, who participate when there are allegations of compliance violations? And this is why it's good to have a chief compliance officer, because that person can call together the team necessary to do a appropriate investigation and handle the situation. So it includes fraud examiners, internal auditors, external auditors, forensic accountants. Okay, that's just doing the obvious group. But then legal and compliance personnel. Yeah, you want to have legal in on it. Maybe you have a law department in your corporation. Are they tainted by this? Or are you going to want to bring in outside attorneys? Human resources personnel, security or loss prevention personnel, your IT people, your computer forensic specialists, and then representatives of management as well. So, okay, there's module 2. Moving on to module 3 and getting inside people's heads. Bad behavior can spread. If somebody is getting away with something, and who did I hear talking about this recently? Oh, it was last evening on 60 Minutes. Not 60 Minutes, the Stephen Colbert Show. Late Night with Stephen Colbert. He was interviewing former President Barack Obama, and he was asked about conspiracy theories, especially like UFOs and such. And President Obama pointed out that one thing about government, you can't keep a secret very well in government. Somebody is going to tell their girlfriend to try and impress her or what have you. And back in late October of 2024, when I was at the National Press Club in Washington, we were talking about fraud in elections. And my friend, one of the authors of your textbook, Dick Riley, was on the panel with me. And, as we've been talking about this, most frauds are single individual, maybe a small group. Very few are very large. So if there was some sort of huge, massive, election fraud going on all across the country, someone would talk. It would get out. Okay. But we've seen this also in organizations like Enron, I'll just stop with Enron. it was pretty well known throughout the organizations that the guys at the top were doing unethical stuff. And so the people next few levels down were like, okay, well, we'll do it too. And so bad behavior can spread. So what you want to use is deterrence to stop that from happening. Fraud deterrence is centered on two ideas. One, the fear of getting caught and the fear of getting punished. So that's why even the dummy camera in the back of the room works. Fear of getting caught. And probably also knowing that getting caught for stealing computer equipment would get punished. So the awareness that fraud prevention controls are in place serves as one aspect of fraud deterrence. So having those fraud prevention controls is good. Deterrence efforts also include detection controls. So they're not, completely separate. Detection controls is like, oh, I'll get detected. I better not commit the fraud. Okay. So they're not completely separate. But there's also a deterrence. You can have deterrence away from, well, I'm saying these are detection controls as opposed to prevention controls. So here is one of Dick Riley's favorite models, the MEDAL model of fraud and white collar crime. Okay. Where, again, what is it about us fraud examiners? We love triangles. So we've got the triangle on the left, the classic fraud triangle, okay, which looks at the perpetrator, the financial pressure, the opportunity, the rationalization. At the far right, we got the triangle of fraud action, which looks more at the crime itself, the act, the concealment, and the conversion. And then in between, we have what is that? It's not a parallelogram, no. A rhombus. I forget my geometry of anti-fraud measures, prevention, detection, and prevention, deterrence, and detection, sometimes called perception. So you got the perpetrator, and we try to, hit them with these anti-fraud measures, detection measures. And so, again, read the book about this. Dick Riley loves this model. I've got some problems with it, but it's his book, so you should know it. So let's talk about that idea of the perception of detection. Okay. Employees who perceive that they will be caught engaging in occupational fraud and abuse are less likely to commit it. That kind of makes sense, right? The organizations, I say that, of course, there are exceptions. The head of the organization who thinks they're above, even if I get caught, they're not going to do anything to me because I'm so important, or I'm the child of the head of the organization. But for the most part, employees perceive that they'll get caught, are less likely to commit. An organization's anti-fraud efforts need to be communicated to be effective. So don't just put, fraud, prevention things in place. Let it be known that you're doing it. Okay. There was a study dealing with, putting, video cameras in places and whether or not you should, hide them or have them, visible, and maybe even put a sign under it. I found that the places where the cameras are visible with a sign worked best than the hidden cameras at preventing it from occurring. Leadership behavior that's consistent with the ethical environment is also important. Yeah, that's where the tone at the top comes in. It shouldn't be, well, these rules apply to you, but not to us. And if not handled correctly, it can actually cause more problems than it solves. So, Effective corporate governance mechanism. Okay, we're going to get into corporate governance. So there, you should have an organizational code of conduct supported by an embedded culture of honesty and ethical behavior. Sidebar, side comment here. Yeah, so if you're an organization, I've seen this where you see, here's our company's code of ethics, and you read this, and you realize no one with the organization was really in on it. They sent the job out to a PR firm, and they came up with this thing. I've even seen that happen at organizations. Like, well, we've been told that we need a code of conduct or a code of ethics, so we've hired this PR consultant to come in and write our ethical code. No, do not do that. Bring one in as to assist, but you should have people from various levels of the organization brought together to come up with a code of ethics that really is built for that organization. Okay, there's my pitch on that. You should have an independent and empowered board of directors. Not a board that's a bunch of employees that will always kowtow to the CEO. Okay, and also not a bunch of folks who don't understand business. As I say, there have been boards of major corporations out there where they place a well-known retired athlete on the board who has no idea what they're talking about with business, or a movie star, or something like that. Though, as I say, Gene Autry, the old singing cowboy movie star from the black and white era, who sang Rudolph the Red-Nosed Reindeer for the first time. He was on the board of a corporation that I audited, and he was probably the most effective member of that board. He knew his stuff. He always wore a white suit with a big white cowboy hat, but he knew his stuff. And again, they should be independent of management. Likewise, also an independent and empowered audit committee. I have been on audit committees. I have chaired audit committees. And yes, I'm independent, and to the extent that I've had management angry with me, but that's okay. That's my job. I should have organizational policies and a reward system that are consistent with the espoused ethical values. It shouldn't be, we give bonuses to people who bring in the most money, and we don't care how you do it. That's what happened at Enron. Not only did they give bonuses to people, they would fire people who didn't, make enough money for the company because they were complying with ethical standards. No, that's not good. Again, you should have a confidential disclosure methods and mechanisms in place, and have effective legal and regulatory compliance and risk assessment in place. The board of directors is key. The board of directors plays a critical role in compliance and deterrence. They set the tone at the top. An effective board also monitors the action of senior management, organizational performance, and key strategic issues. Unfortunately, too often, a very wealthy person will take over or get a majority of shares in a company and will place himself on the board or his minions who only listen to him. That is why I applaud Sarbanes and Oxley when they first drafted Sarbanes-Oxley Act that said all corporations had to have a accounting professor on their board. They realized later they didn't have enough accounting professors to go around. Would have been nice, but it had to be. They have to have a independent financial expert on the board, and that's good too. But a lot of boards who are dominated essentially by one person, and because the other members of the board are just vote the way the boss says to vote, that's not good. when you look at a set of financial statements, look at an annual report, and you look at the board members, I like to see a board that has folks who've got some, some history, some gravitas. This person was the president of a university, and this person was a governor of a state, and this person was, the head of a big corporation and is now retired and things like that. They're great jobs for retired people who have got a lot still to give. So I'm throwing that out there. So that's the board. You gotta have a good board. So if you're looking to invest in a company, look at the board. And the audit committee of the board of directors can be only members of the board, but they can also bring in outside folks. The majority of the members of the board, audit committee are members of the board, but they can also bring in outside experts. I was at a certain large higher education institution in the state of Illinois, and I wasn't a member of the board, but I was brought in as an outside expert, and it's a good thing. So it's a committee of the board. It assists the board of directors in fulfilling corporate governance and oversight responsibilities. A critical role of the audit committee is to monitor the effectiveness of the internal control system, the internal audit, and the external audit, especially that last one. The audit committee is who the external auditors come and report to. They will at least report to first, then they report to the full board. It is responsible to identify and address risks that threaten the organization and its ability to achieve its strategic and tactical objectives. And to the extent that reputational risk can harm those objectives, they should be on top of that as well. So if they've got someone in the organization who's acting unethically, to the extent that unethical behavior could harm that organization, then they should be on top of it. They should also address the risk of fraud, and to address the risk, the audit committee acts proactively. Very important. As to management, organizational leadership. The conduct of the leaders within an organization creates the environment that sets the examples for others. So the organizational leaders need to communicate compliance with company policies is expected, not just of us, but of everyone. Fraud will not be tolerated. Fraudulent or unethical behavior will be dealt with swiftly and decisively, but whistleblowers will not suffer retribution. So, reporting to the board of directors. What actions have been taken to manage compliance and fraud risks? The effectiveness of the fraud risk management program. Any remedial steps that are needed for an effective fraud risk program. Actual fraud risks and actual violations of law or regulation. So if you're the external auditor, the independent outside auditor, if you are internal audit, if you are a fraud examiner or forensic accountant has been brought on board, if you're the audit committee, these are the things you need to report to the board of directors. They need to know about these things. I'll tell you, which is, I should say, fairly recent that board of directors, take up fraud questions, compliance questions on their agenda. I've been on some boards where the old timers have been on the board for a long, long time. We're like, why are we talking about fraud again? Okay, well, guess what? Get used to it. We're going to talk about it from now on. We're going to talk about compliance from now on. And those corporations that don't do it, I know of one, they're not around anymore. Okay. So the fraud risk management leader should regularly evaluate the effectiveness of your anti-fraud program and its management, adjust the tools, the techniques, the controls, and other aspects of the fraud risk management as required. So yeah, you're gonna have, you put a program in, you're gonna have to tweak it every now and then. Hopefully, just tweak. You report through the appropriate channels. along with details of any modifications necessary or technique that has become ineffective. And then you document, and communicate adjustments to the fraud risk management. If you get in a position where you are, a leader of the company's fraud risk management, document everything you do. Why? Because when things hit the fan, they're going to blame you, amongst others. If you can document that, look, I found this and I pointed it out to upper management, I pointed it out to the audit committee or the board, then at least you have some relief. What about our friends, the internal auditors, of whom I have great respect? The internal auditor's primary responsibilities include evaluation and improvement of risk management, controls, and the governance process. Similar to external auditors, internal auditors are expected to exercise professional skepticism. Even though they're not outside and independent, they should avoid any direct conflicts of interest. They should always be unbiased. Sometimes gives you a little heat. But they also should be placed in the organizational structure so that they are not, reporting directly to the president, CEO, or CFO. They should be reporting to the audit committee, or even better, to the full board of directors. Certainly, they need to work with the CEO, the CFO, but they shouldn't be working directly under them. That harms the effectiveness of a good internal auditor. What about the folks down there in the accounting department, the accounting personnel? They are in that unique position to deter and prevent fraud. Accountants, especially, they are properly trained and motivated, are integral to an effective compliance and anti-fraud effort. The accounting department also contributes to tax compliance, such as filing those payroll and income tax forms with the taxing authorities. The one thing that can harm this is when you have the controller or chief financial officer who is the source of the fraud, okay, and overrules things, okay, can just override everything. Barring that, your accounting personnel also put the mechanisms in place so that if accounting personnel think there's something a little, to use a term, hinky going on, they know they can report it to their next level up or two, without there being repercussions against them. What about HR? Okay, we want to have good people in HR. HR gets a lot of heat, often well deserved, but in this idea of compliance, HR is vital. They should implement proper personnel policies with regards to background checks and reference checks. There are laws that restrict what you can do, especially with regards of doing criminal background checks. There's some restrictions on that. At least to the extent that you need permission to do it for most people. Also, it used to be common practice to run credit checks, get your credit score and your credit report of incoming people, even with their permission. That is not allowed anymore in Illinois, except for folks who are in, so we say, riskier, things such as if they're going to be a bank teller. I believe you can still request a credit report from them. Otherwise, Illinois and a number of states have restricted that. But don't, get those reference checks, get those background checks. Likewise, the HR folks should arrange for the training, the compliance training and the anti-fraud training. So make sure that everyone gets it. Okay, Governor State, we had something that we had to get done by May 1. And if you didn't, they withhold your paycheck, something like that. So schedule it and get everyone to do it and comply with it. They design periodic performance evaluations and compensation systems to reinforce the ethical behavior. And Very, very important. When somebody is let go, or more importantly, when somebody quits and is leaving, bring them in for the exit interview. That person who's leaving, especially if they're leaving because they saw stuff going on and they just couldn't handle it anymore, you want to talk to them. And since they're leaving, there's really not much of a downside to them, to that person leaving, not much you can do to them. So very often they are very forthcoming with very important information. Okay. And those anonymous communications. Oh, yeah. If you put in a mechanism for anonymous communications and for, fraud and ethics tips, make sure that the employees and others, it's perceived by them as safe. Okay. And it will be maintained anonymously. It should be available to employees, but also to your vendors, your customers, and other stakeholders. The availability reporting mechanism must be communicated and widely known. So if your company has break rooms, coffee rooms, whatever, lunch rooms, put signs on the bulletin boards, put little tent cards on the tables reminding them, hey, yeah, here's use this 800 number, or shoot an email to this email address, or shoot a text to this phone number. Should be open to any type of inappropriate behavior. The recipient of the allegation must be properly trained to do so, and you can actually hire firms that will do this. The recipients must take the reporter seriously, vet them thoroughly, examine the allegations in order to protect the privacy rights of the accused, and the policies and conduct must ensure that no retaliation takes place against the whistleblower. And what about just our, as they say, line employees and staff, the vast number of personnel, workers in our organization? All organizational personnel contribute to the effective compliance and anti-fraud programs. Properly motivated and tasked line employees and staff help create a strong control environment. So that's one of the reasons that at least annual anti-fraud and compliance training comes in, because you are then bringing them into the group that is trying to protect the organization, which hopefully will be important to them if they want to keep earning a paycheck, that the company doesn't go out of business. So bring them in on it. Let them know that they are valued and they can contribute as well. And then the law people, right? Legal and compliance folks, to ensure that the organization is conducting business to meet the external requirements, to enhance the organization's reputation while minimizing the risk of civil and criminal lawsuits, and to help educate the organization personnel regarding the importance of compliance, legal, regulatory, and other issues. So always good to get the lawyers in there. And speaking as a lawyer, I can appreciate that. Okay, now let's talk about the fraud risk management and compliance program. Okay, here's 10 points. Number one, the firm, and this really comes to the tone of the top, from the very top on down, must make a commitment to compliance in an anti-fraud environment. It can't just be, certainly you don't want one that encourages fraud and non-compliance, but it can't be sort of, non-committal, right? You have to commit to the compliance and anti-fraud environment. You have to set up, appropriate assessment, training, and communication efforts. The organizational leaders and stakeholders acknowledge and affirm their commitment to the compliance and effective anti-fraud efforts. So you say, yeah, we're going to bring in, we're going to, you took the training. At the end of the training, read this, understand it, and essentially sign off that you are committed to this. Conflict of interest disclosure, so important. At least every year, every board I've been on, I have to fill out a form of all of my investments. It's not that long. Um, I say I've been on boards of big big organizations where other members of the boards come in with something that is about as thick as your textbooks with all their investments, uh, in case there's any conflict. And I come in with something that looks like a book report, but that's what happens when you're a professor. But conflict of interest disclosure. Remember, the problem with conflicts of interest isn't that there's a conflict, it's that you don't disclose it. Disclose it. And then if there is a conflict, okay, let's work around it. Your spouse works at a company that's a major vendor to your company. Okay. You just won't work on any contracts involving that company. Fine. Okay. Well, you can work around it, but you have to disclose it. The firm has to systematically complete its compliance and fraud risk assessment, establish those reporting procedures, those whistleblower protections, and again, the zero tolerance policy. You should have documented protocols for handling reported allegations and a review process. So again, when I've been chairing audit committees, somebody calls or submits a text or email about a potential problem, right? We had a protocol in place. The people record it, they pass it on we had a person in charge of these things, but they also shared it with me, who would share it with the audit committee. And then we, if necessary, brought in, outside forensic accountants or fraud examiners to look into it further. Remediation, of course, the core of that word is remedy. Okay, what is the remedy? How can we fix this thing? Are we dedicated to fixing the problem, putting it back the way it should be? There should be program evaluation and improvement activities. They should be, so if, as we go on, we assess the program, okay, then we make evaluations and make improvements, okay. And then part of that is the following year, we go back and see, did those, changes, were they in fact implemented? Again, and that goes to this number 10, our iterative feedback loop that ensures the continuous monitoring and improvement. So very often, we should do this in the coming year. Great. And then nothing gets done. Well, it should be built into the system that, every quarter, every year, you look back and say, well, what was it we suggested last time? This, that, and the other thing. Were any of that implemented? And if so, what? Okay. You have a fraud. What do you do? How do you react? Okay. And sometimes, it pops up on you. You suddenly discover that you had someone within your accounting department who's been embezzling. Okay, well, you don't want them destroying the evidence. You're not even sure about whether it's true or not. So one of the things you need to do is preserve the evidence. If you think it's pretty good, either when the person is left for the day or get them away from their desk and then go in and grab their computer. Okay, take it offline. You don't want them coming back and deleting their hard drive. Prevent them from going into the files. And this is the cases where you sometimes have your building security come and escort the person out. You give them a box, tell them to take your personnel stuff. You have someone watching to make sure they don't touch their computer. Again, hopefully you've already disabled it, unplugged it, if nothing else, and you walk them out. So again, that goes to protecting the access to computerized information. Have trained specialists either on staff more, on your speed dial on your phone. If depending on who you are in the organization, if you're an internal audit, if you're legal counsel, as I say, I've gotten called in as Professor Fraud by legal counsel, general counsel at organizations. They've just been informed of a problem. Professor Fraud, what do we do? I give them some advice, and then I point them to uh, other fraud examiners or forensic accountants to get in there and take care of things. Um, have an open line of communication with human resources so that if you do have to let someone go immediately, they know how to operate. Okay, and of course, always legal counsel, whether internal, you know, the law department within the firm, or with legal counsel outside the firm. Uh, React to the early warning signs. Again, this is where our accounting analytics comes in. Look for those accounting anomalies, internal control concerns, the analytical anomalies, lifestyle symptoms, behavior symptoms. The tips is the big one. Receipt of tips from potential informants. Yeah. So be, always prepared to drop everything you're doing and jump onto this. It makes the workday so much more interesting. So, red flag mitigation questions. Again, red flags do not necessarily mean a fraud has been committed, just that there's some of those symptoms there. So, you've got that red flag, you got an anomaly. Is there supporting documentation for it? Does the documents appear authentic? Does the transaction and its reflection in the financial statements make sense? So there's this entry in the general journal out of nowhere. Okay, does it make sense in light of the company's operations, goals, and objectives? Does the totality of this and similar transactions make sense analytically when evaluated in comparison to the economy, the industry, key competitors, and other related accounting numbers? Does the transaction have proper approval at the proper authority levels? If not, you have a problem. If so, you may have a bigger problem because maybe it's a problem that goes higher up into the organization. But do those approvals appear authentic or were they forged? And are there other aspects about the red flag that make it appear, as you young people would say, sus? Okay. Fraud prevention. Fraud prevention involves deploying the tools and techniques designed to ensure that a particular fraud cannot occur. And it's key there, a particular fraud, a fraud that you thought about, that it's very possible. But remember, fraudsters can be very, very good at their craft and come up with whole new ideas. So, but at least the ones that you know about, we can implement fraud prevention tools. So, separation of duties, so key. Okay, and here we have the four places where we want to separate duties: the initiation of a transaction, and then the approving of a transaction. The person initiating a transaction should not also be approving it. Let's worst case scenario. The person initiates, approves, records, and then safeguards the asset. Man, that's a problem. Okay. So let's separate those. One person initiates, another person approves, another records, and a fourth person safeguards the asset. In a small business, you can understand that can be troublesome. And this is where, and I've talked to small business owners, this is where they come in. Okay, they may not want to do all this stuff, but you can't just throw it on the office manager to do all those things, because then you are giving them the keys of the kingdom to rip you off. So your process controls should be consistent with that whole notion of deterrence. Okay, the idea that the controls in place will send that signal that noncompliance, you will be caught and you will be punished. So basic process controls include, reconciliations, independent reviews, approvals, and sign-offs, physical inspections and counts, analyses, and audits. One of the great things about any kind of an audit is that it sends that signal. Again, in the U.S., our income tax system is a voluntary system, right? Very few people, we don't make you come down to the IRS with all your paperwork and fill out the forms right there in front of an IRS agent. No, we expect everyone to voluntarily, file their 1040 every year. Why do they do it? Because of the potential of being audited. That's the deterrence. Okay. The fact that you might get checked on this is the deterrence. I've been suggesting in election controls. If somebody comes in and says, "Oh, I'm Joe Smith, but I left my wallet in the other pants, but I'd like to vote." Okay, well, we'll have you sign an affidavit swearing under penalty of perjury that you are, whatever you said your name was. Okay, well, that's part one. Fear of being caught and, punished for perjury, for signing a sworn affidavit that's false. But then I also say, when you come in, check yourself in most places, we have what we call a poll book. It's essentially an iPad that's got all of the the names and addresses of the voters on there. Okay, what's on the front of, or really the back of all iPads, the front and back, is a camera. Okay, take their picture and let it be known that if you come in, you don't have ID or whatever, fine. Not only will you sign an affidavit, such that if you lie, it's perjury, but then we'll also take your photo so that we will find you. It's amazing what a deterrent that could be. Does it prevent someone from, voting falsely? No. Will it deter them? Oh, yeah. Anyway, deterrents have great, audits, or, any of these process controls have great effectiveness in deterring a fraud. And for the last time, there's the copyright.